Welcome to this week's Property Insider Show, where Dr. Andrew Wilson and I are going to explore the big rental squeeze that's taken hold of our capital cities. Vacancy rates have dropped again and many cities are seeing new peaks in asking rents. We're also going to touch on why Melbourne continues to surprise with very strong auction results and whether this is a sign of Melbourne's now broader resurgence. And as consumers tread carefully with their wallets, we're going to look at what this means for our property markets heading into winter. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can keep you updated each time a new show comes out. As the cooler months set in, Australia's housing markets are anything but cold. Last week we discussed how property values are rising month after month around Australia. And this week I'm going to ask Dr. Andrew Wilson, Chief Economist of My Housing Market, to unpack the latest rental market data, which shows how rental markets across the country have tightened and putting fresh pressure under rents. We're also going to look at what's happening to consumer spending and how Melbourne is now leading the pack in auction results, even despite all the long weekend distractions. There's lots to cover, so Andrew, I look forward to our chat today.
Yes, thanks, Michael. And we're into June now, well and truly. So it's chilly, I think, just about everywhere.
Yes.
Not just Melbourne town, which has had a rather bleak King's birthday holiday. But I'm actually up north today, lucky me. But it's a little chilly up here as well. But the sun is shining. But the sun is shining on our housing markets too, I think.
Yes. Well, it depends if you're a landlord or a tenant.
Yeah.
At the moment for tenants. End of last year, I think the rental market slowed down a bit and April had lots of distractions. I guess people weren't looking as much for tenants, new residences when there was all those public holidays, but May is a very different picture, isn't it?
Yeah, we've bounced around a little bit in terms of our rental market numbers over the last 6 months or more, really, Michael. Of course, after a year or two of very strong growth as borders reopened, and we saw some easing in that last year through the second half of last year, a little bit to do with a sharp reduction in the intake for international students, particularly, which was a government policy designed to reduce demand, particularly in the rental markets. It worked. Of course, we were seeing rents rise in some capitals by 20% plus per year. And of course, that's unsustainable going forward because people just aren't seeing their wages increase at that rate. So even though they still have to queue up to secure a property or inspect a property and then hopefully secure a rental property, it doesn't necessarily mean that they'll be paying more in rent because it's those affordability barriers. Part of the story of why we did see rental growth easing last year. Also, I think that once we did start to see perhaps some affordability issues waning, in other words, people started to earn more, therefore they could again pay more for rents in a strongly competitive market. We then had the seasonal effects, of course, December, January, February, we see less demand because of holiday distractions, back to work distractions. March, then we sort of bounced back because that was a more of a fully focused market. And then, of course, April, we saw a sharp increase in vacancy rates across the board. But April was a remarkable month, Michael, in terms of holidays and distractions. We had not only a late Easter, we had Anzac Day straight after that. And then, of course, we had the federal election at the beginning of May. So it has been a up and down last 6 months in terms of rental market focus. So no surprise, our latest report over May has seen a sharp, resumption of demand within a full month, a non-distracted month, and vacancy rates have plunged again downwards. So not a lot of good news there for tenants, unfortunately, and with an economy still firing along, and the latest wages data has shown a rebound in wages growth. I don't think it'll be too long, given these quite low vacancy rates, before we see rents rising again. So I think it was just a bit of a pause last year. And really, we don't have the same sort of distractions coming forward now for the remainder of the year in terms of rental market activities. Shall we look at the latest numbers, Michael?
Honestly, I can see the figures that vacancy rates kept falling, but rents didn't rise in a number of the states.
No, I think that we need to see some momentum over time to gather rental increases. As I said, affordability issues meant that even if there was still a lot of competition from tenants for available properties, it didn't necessarily mean they had the capacity to actually bid them up. And I think over time, as incomes increase and vacancy rates remain low, which of course means there's plenty of competition for property, we'll see rents starting to rise again. But yeah, look, a bounce back over May. All capitals reported lower vacancy rates, and that was the reverse to what we reported over April, when most capitals reported higher vacancy rates. And of course, that was because of reduced demand due to those holiday distractions we discussed. So certainly the big picture is that vacancy rates remain low almost across the board, in fact, across the board, and that reflects strong competition amongst tenants for available houses. And of course, we know that over time that certainly will result in higher rents, Michael. So the actual data, when we look at the breakdown on a capital city basis, Sydney, Melbourne and Brisbane house rents, these are asking rents, of course, median asking rents over the month were flat, and Perth as well. Hobart and Darwin are the big, smaller markets with the largest increases. Darwin up by 3.6%. That Darwin market, not just in rents but also prices, Michael, has certainly shown a revival over the past 6 months. Darwin back in town after a lengthy subdued period. Hobart also has been gathering some momentum in both rents and prices. It was up by 2.9% over the month, and Adelaide up 1.6%. When we look at the various annual results, so Sydney house rents are down by 2.3% over the year, been reasonably flat over the past year. And of course, that reflects what we were saying about particularly those changes to immigration intakes, student immigration intakes, overseas intakes. Similarly, Melbourne's down 1.7%. Sydney remains the most expensive place to rent a house at $800 per week, median asking rent over May, and Hobart the most affordable with a median asking rent of $581. And over the past year, the leaders have been Adelaide up by 5.8% in house rents, and Darwin up 5.7%, Canberra up 5.2%. But when we look at the vacancy rates, Michael, we did see every capital city record a fall in the vacancy rate over the month. That's May compared to April. As I said, we shouldn't be surprised at that, given that there are underlying shortages of rental properties, regardless of the seasonal impacts. But vacancy rates are now getting back to that very ugly, either at 1 or below 1% generally. In fact, the highest vacancy rate we have at the moment is Canberra at 1.5%. And as we always say every month, just to acknowledge that 2% is probably the balance, 2 to 5% is probably the balance in rental markets between flat rents and higher rents above that and lower rents below that. And we've got half of the capital city markets actually have vacancy rates below 1%, Adelaide at 1%. So these are very, very low rates, Michael, and do reflect a shortage of rental properties for houses. When we look at the unit market, similar story, vacancy rates down across the board over May compared to April. Vacancy rates a little higher for units compared to houses, but nonetheless, all capital city markets are below 2% now and have fallen. Even that Melbourne market, which was in the mid-twos earlier this year, is now down at 1.9%, and Canberra also at 1.7%. But really, the vacancy rates, the May vacancy rates, are certainly reflecting that shortage of rental properties, which is really endemic to Australia's housing markets. By and large, Michael, and not just Australia, really. This is a general trend from advanced economies, very tight rental markets.
We've been saying it week after week also that there's no end in sight to this. No. More people are coming to Australia. We're just not building enough for all the reasons we've discussed in previous shows. So with such low vacancy rates, it's likely rents are going to keep increasing for the foreseeable future. Big developer Tim Gurner suggested that it'd be 15 years before we make up the shortfall in development, providing enough accommodation for Australia. Maybe it won't be 15 years, but boy, it's going to be some time before we reach an equilibrium.
Well, I think only a significant economic downturn would result in that, Michael. The systemic problems in terms of supply are such that demand will continue. And even when the governments have reduced demand by changing the mix of migrants, particularly student migrants, international migrants. That's more of a short-term solution. It's not a solution, but has a shorter.
It's also a very specific part of the market too.
Well, that's right. But I'm just saying that over time, as long as we continue to have more people coming in than we're building new properties, we're just going to get further behind. I'm not sure, as the new government mentioned their previous targets for new home developments, new home approvals or construction, because that's now a couple of years old, those forecasts, and they're so far behind now. It really is quite ludicrous to
They've been very quiet about that, haven't they?
Well, that's right. And I think what they're doing is, because they really can't do much about the supply side issues in the housing market, they're just, attacking the demand side. As we've seen with those first home buyer policies they've introduced, which will only mean higher prices, really, because the last problem Australia needs, its capital city housing markets particularly need, is demand. There's no problem with demand. The problem is supply. There's plenty of demand, and we just can't match demand, that level of demand, with supply. So I don't think there's a solution in sight other than a significant economic downturn, and that's certainly not in sight, Michael.
Not a solution by any means. I interrupted your train of thought because you were going to take us through each of the states. The chart at the moment shows what's happening around Australia.
And just to finish on the economic downturn, that would only be short term because people would stop their, normal movement between family units, Michael. They just postpone, stay at home longer. That's what happens typically when there are problems with job security and those associated negative sentiments that go with that. Let's have a look at the figures. Again, we saw Sydney and Melbourne were flat over the month. Sydney's still the highest capital city for unit rents, $750 asking rents for units currently. And Hobart also, again, similar with houses, the most affordable at $491 a week median asking rent for a unit over May. We did see unit rents fall in Hobart and Darwin over the month, and however, Adelaide was up by 3.8% and Perth up 2.7%. Canberra also showed some growth in unit rents, up by 2.6%. And then we look at the annual figures, the growth over the year, probably a little bit stronger over the year for units compared to houses. Leading performer Adelaide, Perth up 7.2%, Hobart up 9.2%, Melbourne up 7.3%. So some reasonable growth there. Sydney unit rents are actually down 2% over the year. Again, similar to houses, I think that's part of that reduced demand through changes to immigration policies, or changes to the level of migrants we're taking, particularly students. So again, not a lot of good news there for tenants in the unit market, Michael, over May. And, it's going to be, without the sort of holiday distractions going forward now, it'll be interesting to see just how our rental markets, particularly in terms of rental growth, evolve over the next 6 months or so.
Well, we keep saying that we're not building enough, but there's another factor as well, Andrew, that some landlords are getting out of the property market because of changing in tenancy regulations or land tax. In Victoria alone, there were 24,000 fewer rentals, 3.6% of the state's entire rental stock. And the way we know that is because of the rental bonds, which is, I guess, a proxy for the number of rental properties in the market. That fell considerably by, as I said, 3.5% over 2024. And a lot of so we know that investors are selling off, and many are selling clearly to owner-occupiers. So as they sell down, if there are not as many rental properties, and that's in Victoria alone, that must push rentals up. And as you've already shown, they've started to do that in Victoria and around Australia.
Oh, yes, interesting, Michael. It just hasn't resulted in higher prices. One would expect that if you were seeing that sort of an exodus from the investors. But nonetheless, we still are faced with a shortage in all our capital cities of rental stock. And the latest data from the ABS in terms of lending to investors has shown that investor activity actually has been quite strong over the last year.
Some are moving out, and the smart ones, the strategic ones, are moving
in. And they'd be feeling pretty good with 2 interest rate cuts and a revival, particularly in that Melbourne market, certainly on the cards now. So I guess if you got in those periods where you said perhaps change of those leaving and those moving in, they might be regretting that a little bit, Michael, now with capital growth reemerging. particularly.
Now, each week we discuss a number of economic factors. This week I'd like to ask you about retail sales, which I guess in some ways, Andrew, is a proxy for how comfortable consumers are feeling about their financial future. What's going on in the retail sales arena?
Well, look, we've seen a very solid, over the last few years, really, April, retail sales have continued to really move against expectations that higher interest rates would reduce demand. It hasn't happened. The Reserve Bank has admitted they've been surprised by the strength of consumer activity. Of course, it sort of flies in the face of a lot of those soft data models such as consumer sentiment models, which seem to be completely different to the hard data that we get in terms of retail sales. And as I said, the Reserve Bank has conceded that that they haven't judged consumer activity at because they've been saying it's been weakening at its at its strength, which is continuing. But down a little bit over April, retail sales data from the ABS, 1% lower over the month. Still up 3.8% over the year, Michael, which is a strong increase. We had a 0.3% rise over March. And that annual growth number is still robust, despite it obviously being inflated by migration in real terms and inflation, of course, which pushes up the value of retail sales, notwithstanding the amount of retail sales we have. But we're still elevated compared to where we were through the COVID period. And of course, lower interest rates will only help retail spending, Michael, because people will have more money in their pockets, and they will continue the growth, I would suggest, that we've seen in retail sales consistently over the last couple of years. And it does reflect positive consumer sentiment. And when we look at the longer term chart, we're still tracking considerably higher than the pre-COVID period, and really no sign of slowing down in terms of annual growth. And that current 3.8% growth is certainly quite strong, once we move through the ups and downs of the COVID period. So another tick for Australia's economy, Michael. And of course, this is retail sales. And as we've just been discussing, we've got plenty of action with home sales as well. So,
Yes.
and I think if there's, a lot of negativity, as some surveys suggest, quite puzzlingly, in terms of consumer sentiment, people wouldn't be buying houses, I'm sure. But retail sales certainly support a robust economy, which we have certainly on other measures.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event. So you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Much of Australia had a public holiday long weekend and the King's birthday weekend, beginning of the ski season. People were away up in the snow. Having said that, though, auctions still continued on, and Melbourne keeps continuing on, doesn't it? It's remained very strong.
I think 5 out of the last 7 weeks, Melbourne's actually recorded the highest clearance rate, which we haven't seen that for quite some time, Michael. Melbourne clearance rates are now at their highest levels for a couple of years, quite consistently. And that's the point. There's a lot of consistency about the Melbourne market now. It's not just 1 or 2 weeks that we're seeing those low to mid 70 clearance rates. It's now week in, week out. Melbourne loves its public holidays typically, and the King's birthday is no exception. We do see a falling away in the number of properties offered because of the distractions. Of course, it's on the Monday, but it's still of the next week, if you know what I mean, rather than the previous week, but it's still counted because we have the long weekend. And of course, that really does pull auction numbers down on the Saturday, and that's what we've seen over the...
Almost by a third in Melbourne, wasn't it, the fall?
Yeah, that's right. Well, it was. That's right, Michael. Still a good number there, 519 auctions in Melbourne, down, of course, from the previous week, which was inflated because of the forthcoming vendors and agents wanting to avoid the distraction of the long weekend. So 519 auctions versus the previous week's 1,417, and higher than last year, Michael, where we had 488 over the same holiday week. And the big difference, of course, is when we look at the clearance rate, Michael.
Yes.
Again, Melbourne had a 72.5% clearance rate, which was the highest of all the capital cities, and well above, once again, I think that's the notable statistic, is continuing to track well above where it was a year ago. In fact, the holiday week last week was 58.1%. So that's a big difference, Michael. Sydney also produced a solid result for sellers over the holiday week. 666 auctions versus 1,008 the week before. 71.8% clearance rate. Sydney, quite a good solid result there, as I said, for sellers. A little bit down from the week before, 74%. Look, I'm sure there was some holiday distractions impacting that market, and again, very similar to to last year. Although auctions were higher last year, there were 523 auctions in Sydney and a 72.9% clearance rate, so reasonably similar to last year. Brisbane almost the same old compared the week. This week to last week. Brisbane, of course, didn't have the public holiday. They have it at another time. King's birthday, they celebrate it at another point of the year. Clearance rates are down, continuing to be lower than where they were a year ago in Brisbane, where it was a very strong, in fact, record level clearance rates for that Brisbane market that typically tracks around about 50%, 45 to 50% in what we call a growing market. But it was a booming market a year ago, and clearance rates are well below at that level 12 months ago. Adelaide's been a market that's moved away also from where it was a year ago. It was Australia's strongest auction market a year ago. 59.3% clearance rate from 125 auctions, similar to the week before, but the clearance rate lower and well below where it was a year ago. And, that Canberra market, Michael, is just starting to look like maybe we can be a little bit more optimistic about a revival in the Canberra market. It's starting to push up towards 70% clearance rates, which we haven't seen in Canberra for a couple of years. So, even though holiday weekend, okay, we take it with a grain of salt, but 69.7% clearance rate. Good number of auctions, 70 auctions, down from the week before, but the clearance rate was up and certainly lower than where it was a year ago, which, as I said, was a very atypical result a year ago in Canberra. But nonetheless, the signs are looking a lot better for that Canberra market. But we need to see, as with Melbourne, a lengthy period, above 70%, I would suggest, Michael, before we started calling a consistent revival in Canberra. When we look at the long-term trend, Sydney around about where it was a year ago, but it's been a very solid past 70% start this year to Sydney in terms of clearance rates, and that's a very solid, consistent market favouring sellers, certainly the Sydney market. Melbourne, we can see just on the trends how much stronger that Melbourne market is compared to a year ago and compared to the end of last year. So Melbourne continues to carry on with so far over June, of course, with the first week of 72.5% clearance rate compared to all of June last year, which was 64.1%. Brisbane just hanging around the same numbers this year so far. A little stronger over June, which was just 1 week, and May was also an improvement. But we know, looking at price data, that prices are continuing to rise in that Brisbane market. And when we do look back a year ago, it was a very strong market. Similar story there, but more so with Adelaide. Adelaide's really been drifting downwards this year so far, particularly compared to those boom time results it was recording a year ago. And we have seen some flattening in prices growth in Adelaide, which reflects, of course, as we know, auction markets do tell us what's happening generally in the wider housing markets. And Canberra, yes, the Canberra market also looking quite good and well ahead of where it was over June so far compared to June last year. So we're getting close to perhaps calling a revival in that Canberra market, Michael. If you're looking for the latest auction clearance rates, they are on my LinkedIn site, Doc Andrew Wilson at LinkedIn, every Saturday night at around about 6 o'clock. And Michael publishes the full national report, which on Sundays, which through his various social networks, which of course include the regional breakdowns for Melbourne and Sydney and the top 10 sales under the hammer for each of the capital cities. So That's our, is it our first week in June? Well, yes, it is.
No. Actually, I think it was the 2nd of June last week when we got
That's right.
together.
Yeah.
But having said that, all this is purporting to give us a much stronger second half of the year.
Yes.
This first half had lots of interruptions with
Yes.
the elections, the overseas tariffs issues,
Yes.
and the various holidays. In the meantime, in the background, interest rates are coming down and are going to come down again. Inflation's coming under control. Buyers are coming in, they're circling, but collapses. The supply is, well, collapsing, I guess, in some ways. So therefore, I think we're going to have a very tightened property market in the second half of this year. Fewer properties for sale, strong rental demand, upward pressure on values. There'll be lots to talk about each week, Andrew.
That's right, Michael. And we've yet to see the impact of that May interest rate cut. So not sure we'll get another one soon, but we'll see. Everybody's got a different opinion on that. But certainly we haven't seen the energy of that second one into the market. But our forward tracking is certainly showing over the past couple of weeks some increased activity in all our capital city markets. We would expect that to flow its way through, particularly now we're working into the midwinter market. We've only really got 2 or 3 weeks left, Michael, and then we're into the mid-year winter market, which typically is quieter. So I would suggest we've got a nice platform set up for a good solid spring selling season.
Fantastic. Look forward to catching up with you again next week, Andrew.
Thanks, Michael.